All right, what's up, you little biscuits? My name's Sumner Healey. Today I'm going to talk about where I think the land business is going. In fact, where the land business has gone, how it's changed currently, and where I think the puck is going. Like anything, stuff changes. Business has changed. So if you're a land investor, you want to watch this entire video because I promise you what you'll learn here could make or break your success in this business, truly. Now, before we get started, just a quick plug, landinvestor.co/first deal. I just put together this 90 days to your first land deal webinar. It's like a 2.5 hour long webinar. It's free. It's kind of bad to the bone, honestly. I did it for like 60 or 70 people live. And I said, you know what? I'm going to share it publicly. So hop on over, put the link in the description. You guys put your information in. It's a really good webinar. You're going to like. All right. So the land business has changed. Ouch. Kind of painful. Well, honestly, the land business changed after 2022, to be totally honest, at least for me. The end of 2022, like the fall of 2020, the rug kind of got pulled on the market. We had a bunch of listings coming off the heels of our best year to date at that time, and everything dried up. All the liquidity gone. And we're still really paying the price for this. And honestly, this is how Land Insights came to be, because I had to figure out a way how to sell my properties in a decent amount of time, right? We had this crazy boom during COVID. Deals were selling in 3 weeks. It was all gravy. 2022 came, rugs pulled. Ouch, this really hurts. So one of the key things that I'm seeing today is, I don't know if there's going to be a recession. I don't know if things are going to get better or worse. I would imagine probably going to get worse before they get better. But right now, your market selection is paramount. Being able to have a quick cash conversion cycle on your marketing dollars, not having capital floating out there for a long time, because you've got deals that are selling like this, is so important. And there's a lot that we can do there outside of selecting markets, like pricing our listings well, like listing our properties well. But honestly, nowadays, that's a dime a dozen. That's the easiest thing to do. The real needle mover in this business today is being able to work in markets that have a lot of liquidity. And in order to do that, you need to go and aggregate kind of a bird's eye view of this country, counties and zip codes. If you're just working in one state, you can just do it on a state level. But ultimately, I think finding these liquidity pools work best when we're non-dogmatic, when I'm not just trying to focus on Texas, when I'm open to all possibilities. You find these little pools that just soak up land when they come there. And so what we see is, like, we're having folks inside of Leah that are selling their deals faster than we were even during the whole COVID boom. Consistently, we've got folks selling deals in hours in some cases, days with multiple offers. I mean, it's crazy. And I don't think the market's rebounded a ton. I think actually there's a lot of people out there that are really struggling right now to get their deal sold. Literally, just about every single person inside of Leah either uses Land Insights or uses kind of the model that we teach, which can be done manually. It's just, expensive and it's a burden to do, but it can be done manually. And that's just been a really clear defining difference for me. So if you are having a hard time converting your deals, or you're having a hard time getting cash back into your business so you can redeploy that money and scale, where you need to be focusing on great markets. And in that same vein, when we're in great markets too, we can also get away with so-so deals. So after 2022, the so-so deals, right? The ones that were kind of landlocked, that you had no physical access to or whatever, were really hard to sell because the markets also sucked. But we can unlock new deals that otherwise we couldn't if we were in a crummy market. So what do I mean? Well, there's markets that have so much demand that I can bring a lot where I create an easement on it, even if it's got no physical access, and I'm still getting 65% of retail value. That story is not playing out in bumfreak nowhere, Costilla County. It's just not going to happen. I think this trend is going to continue to play out. Now, could we go through a big liquidity boom again and it's COVID all over again? Yeah, it's possible, but I don't want to build my business on a hope and a wish. I want to build my business on something that's highly repeatable, which finding great markets is highly repeatable. Anyone can do it. We've shared a lot of this information on our YouTube channel, so there's no reason to be ignorant when it comes to finding liquidity in this business. Number two, this is moving to an acquisition game, in my opinion, okay? Everyone talks about 50-50, it's marketing and sales. I've always wondered how true that was, but it's really become apparent to me in the last year, maybe a year and a half, that acquisitions trumps marketing. I believe it in my bones. And I've just seen that we can make pretty much any channel of marketing work if we've got an airtight acquisition process. Now, this comes down to two things. One, it's the quality of how we handle our sellers. And the second side is like the quantity of the touches, or how we actually run our cadence to work these leads, how we run our cadence to get the highest answer rate on our initial calls, how we run our cadence to continue to show up and follow up based off the context of the seller situation, even if they've told us, no, I don't want to sell to you right now. It's that quality and quantity balance. Now, someone asked me this inside Discord the other day. They said, Sumner, is it more optimal to be great on the phone or to have a great acquisition process? It's number two. It's a great acquisition process, so assuming you're decent on the phone, okay? We can't be a bumbling, fumbling ding dong. If you're decent on the phones, I would rather take a great acquisition process. So the day and age of just taking the lowest hanging fruit, the leads that come to you that require no work, they're gone. You can still do it, but it's a horrible business model with big feast and famine troughs. You've got to become an animal, adhering to an acquisition process and having a real flow and a process for building rapport and understanding sellers and understanding that ultimately you're just here to solve a problem for them. That's it. Still see people that hop on the phones. They pretend like there's some AI robot. They hop on there, they talk for 5 minutes, they throw out an offer. The seller says yes or no. That's it. They never talk to them again. That will not work. In fact, it's never really worked. It's just there's been so much low hanging fruit that you could survive with a really crappy acquisition process. One of the things that I recommend is really make sure that you are role playing with your team. Make sure that you are sharpening. Sales is a contact sport, right? They can be onboarded perfectly and forget all of it in the next 3 months. So it's a continual reminder on our process. It's a continual reminder on what a good call looks like. It's a continual game of role playing, objection handling. It never stops. I thought you guys might find this interesting. This is inside of one of our Slack channels. And you can just see we've got folks scouring our CRM to look for where are we dropping the ball. And look at, we are always going to drop the ball. Like that's never not going to happen, but we don't let anything slip through the cracks. This was yesterday. This was Monday. I mean, you can see that we really are on the ball. And to do that, it's not just having your AMs take full accountability. They're in the trenches. They need some oversight as well. Oversight on listening to the recorded calls, making sure that we're making accurate offers, making sure that we're following up correctly, making sure they're signing contracts on time, all that jazz. One of the other big things that you guys can do to really set yourself apart is stop sending contracts blind, okay? Your blind offer is marketing. That's not how we get deals done. Once you've got a seller in your domain, in your orbit, we're not just going to send a contract out and hope they sign it. We send that contract, we walk them through it live on a call. We make sure we answer any questions, handle any objections, and we prompt them to sign right then and there. This little business of land investing is starting to look a lot more like a standard sales operation. The stuff that people have been doing in sales organizations forever is starting to become more and more relevant here. One of the other things that I see that I absolutely hate and boils my blood is folks that come in that don't know shit about acquisitions, that want to build an acquisition team, and it never works. So even if you're scared to get on the phones, you hate it, it boils your blood, pick up the phone and get good at it. You're never going to manage a high level acquisition team unless you're decent at it yourself. And this is such an important issue. That's why we're building out our next program, which is all built around the Leah acquisition blueprint. It's not only all of our sales training, it's also how to build acquisition teams, how to source the talent, a program to train the talent for you, and a separate program to actually ensure that you're managing the team at the highest level possible. Because I am so bullish on the fact that this is the great equalizer. This is the needle mover. I don't care what marketing channel you're using. Like so many land investors are so fixated on I go from RVMs to cold texting to cold calling. Dog, it does not matter. It really doesn't. Okay. Some have a better cost per lead than others, whatever. They all work. You need to get great at acquisitions and great at building acquisition teams. 3, I think in-house dispositions is pretty much dead unless you're at a ginormous scale. I really think the model nowadays is highly leveraged using realtors, getting most of your deals sold on the MLS. And what I've seen is platforms like land.com, like LandFlip, that's where we really feel the competition. There's only so many eyeballs for buyers there, and there's so many more sellers selling land there that we're not getting the same ROI from there. We are selling the vast majority of our deals in the MLS where it used to be flip-flop. And what we find on the MLS is, and I hate to say it, but a realtor really does add value, a good realtor. And I've eaten my words on this in a big way. Being able to show the property, having someone that can add an air of legitimacy if you're doing a double close or a more creative exit strategy, someone that might have pocket buyers, someone that might understand a hard to price market or a hard to pinpoint deal and how to actually understand the value around it. Or we get deals all the time that there's no way with on-market data, we can accurately understand what it's worth. How can you underwrite a deal that's got a hunting blind, that's got a septic system, it's got a 200-foot well producing 15 gallons per minute, and it's partially wooded? How are you going to understand that value just off of MLS comps? You can get close, but it's not pinpoint accurate. And what we find is a great land realtor that really knows a market well, they can help you there in a big way. And that kind of leads into the next point, which is creating this highly leveraged land business that's very low friction. And by low friction, I really mean less people. People are complexity. I've always said that this is a labor play. It requires people, and that's not going to change anytime soon. But I really think revenue per employee, high revenue per employee, lean, nimble operations, less is more. To make that model work, You've got to be ruthless with getting rid of folks that just are not A players. That sucks, but you need to curate a team of true A players. And where we need kind of additional resources, we'll use contractors, things like realtors, opposed to having that in-house. Now, that's not the only reason we're using realtors again, but it's one of the big reasons, one of the really big reasons. And if you're not listing your properties on the MLS today, I really think you're missing out on where almost all of the action is. Yeah, there's still deals that get sold on these other places, but they are not what they once were. In fact, the prices have gone up. A lot of them or stayed the same. And so ultimately, the return that you're getting from those platforms has just become substantially worse. Now, kind of in the same lane, I don't know who I'm speaking to in this video, but maybe this resonates. If you're playing the small deal game, you're playing the wrong game. I promise you, that is not where you want to be hanging out. That is where there's the most competition, ironically, in the game of land investors marketing to these owners. There's also what I found is the least buyers there currently, okay? You've also got the buyers that are the most affected by a change in the economy. We've got whatever 100 of these small deals listed on our website that are just kind of old owner finance deals, and they're almost impossible to sell. They're so damn hard to sell. We'll sell 2 a month, where 2 years ago we would sell 20 a month, pretty much with the same exact process. Like, our process hasn't changed, just the market's changed, right? Where we want to be hanging out is the mid-market strategy that we teach inside of Leo. Okay, that is this sweet spot. That's where the deals are big enough to use other people's capital to fund them. You've got the highest number of buyers, and you've got buyers that are higher up on the economic totem pole. So they still have liquidity. And some of these deals they can qualify for bank financing on. Like, it's just a much better cohort of buyers to be working with. And it's substantially more meaningful for you as a land investor. Every month we get people joining Leah that come from a lot of those small deal programs out there. It's just almost impossible to be profitable in that business model, especially if you're trying to grow, especially in this market. And so it would take them 20 deals to make what they can make with one deal inside of Leah. And the best thing is their capital doesn't even go into that one deal. Just a much, much better model. Now stick around. I've got 2 really important points and we're going to conclude this video here. And these might actually be the most important. I'm not quite sure. Just like we talked about trying to get away from the low-hanging fruit game in our acquisition, we need to get away from the low-hanging fruit in our marketing. So back in the day, and even still today, the vast majority of land investors do this. They go into a county. Let's say they're pulling 5 to 50 acres. They take everything that Data Tree or Land Vision gives them, and then they market to everyone on that list. But here's a little dirty secret. Half of those properties on that list, they would never want to buy. They're landlocked, they're flood zones, they have wetlands, they are very weird shapes, they have really bad topography. Deals that the land investor would never want to buy, but they're spending their money to market to them. The low-hanging fruit is, well, hey, I'm still profitable, so why not? It doesn't really matter. And that's true. That is true. You can still be profitable with that model. But again, we're really moving to a place where waste is going to be no longer acceptable in the land business. There cannot be any slack in your system to be proficient and growing in this market. And that's going to continue to remain true as more people come into this space. The bar does slowly get raised, but the good news is most people aren't going to raise the bar themselves. Maybe you watching this video, maybe, but I can guarantee you 90% of the people that watch this video will not take anything that I say here to heart. It's just kind of mental stimulation, fugazi, that they never do anything with. So if you're serious about building a life in land, please listen to what I'm saying here. You need to be removing that fluff from your marketing. Get it out of here. Think about it like this. Okay, if you're spending $10,000 a month on marketing, okay, I told you that we can chop half that data off. Now, what we could do here is you could have the same results by now spending $5,000 on marketing. Okay, you get the same amount of deals, but that's awesome. Or if you're smart, you say, okay, I'm still going to spend $10,000 in marketing. Now I'm doubling my revenue, right? I'm getting more bang for my buck because I'm removing half of the fluff there. That might seem crazy to you, but the land business is a very linear business with marketing. It very much is inputs to outputs, for better or for worse. And so if there's a way that we can go chop half of your marketing spend and remove the junk, but you can still remain at the same budget, oh, you're going to double revenue. That's effing insane. And ultimately, the metric that we look at is ROAS. That's how we know how well we're doing. Now, the truth is, it's a real pain in the butt to do this. You can do it manually inside a data tree. You can do it manually in some platforms. It's really, 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 really hard. But it's what we did for a long time, and I know it does work. Alternatively, inside of Land Insights, we do have our AI scrubbing for landlocked, for flood zones, and for wetlands. And we're adding it for a few other search variables as well. You can compress what would take you 4 hours per 1,000 records and get it done in 5 minutes, 10 minutes. It's pretty darn nifty. No matter which direction you go, though, you need to be removing the fluff from your data. Gotta happen. Whether it's you doing it, a VA doing it, Land Insight's doing it, however you want to do it, it has to happen. And last but not least, this is kind of an odd one, but I still see so many people dropping the ball here. Every listing that you're bringing to market, in my humble opinion, should also include owner finance terms on it. Now, why would we want to do that? Well, one, you might get a great offer that you want to hold on to, right? If you get your basis back immediately in a couple months, why not hold on to it, right? Why not get some cash flow in the business? Or if there's an offer that you don't want to hold on to, the note buying space is growing for land. There's a lot more buyers for notes. And so we can go and turn around and sell that note. In fact, we've done this twice in the last couple of months for deals that were really hard for us to move. Okay. We were having a hard time selling them cash. And we said, you know what, why don't we just take some of these owner finance offers? We accepted them, put them up, we resold them, easy peasy. Now it's going to range on what you're going to get, somewhere between 65 to 75, 80% of the note's value. You hold on to the down payment. Typically it's going to have to be through a deed of trust. You should typically be shooting for about 15 to 25% down as a down payment from the borrower. And I'd say anywhere between like 12 to 13% interest, 5 to 7 years. So there's just some rules to the road of how you want to structure these. Honestly, in your listing, don't get too analytical about it. Just say, hey, owner's willing to carry a note with at least whatever, 25% down. Let the offers come to you. You don't need to accept them, but every listing you put out there should 100% have owner finance terms. It's just a no-brainer. And every now and again, we get the craziest owner finance offers. You're just like, what? Imagine a deal that you have listed at 100, your basis is 25, and you get an offer where they come and give you 50 grand as a down payment, and you got whatever, another $100,000 that you're going to get paid out over 5 years. Like, that's a sweet freaking deal. And those do crop up. So if you're listing properties, not including owner financing, please, for the love of God, do it. As liquidity dries up, you need alternative methods to move these properties. Beautiful thing is, you got to decide whether you want to keep it or not. The no buying space is growing pretty rapidly. So anyways, guys, I hope this was helpful for y'all. There's probably a lot of things that I missed here. This has just been my humble experience, but I've definitely seen some significant changes. And actually, I know for sure there's some things I didn't cover here that I have felt or I have seen. But stay sharp out there. Look at when things change, when the puck goes in a different direction, there's an opportunity to pivot. There's an opportunity to kind of leap into a new dimension of growth that can be really exciting. But you've got to keep your eye on the puck. Okay. Don't get stuck in old ways. That's how people get smacked around. That's how people say, oh, it's not working or this doesn't work. No. It's you. The puck has gone in a different direction. Stay sharp. Keep on rocking and rolling. All right.